Joining me now is managing principal at 7th Capital, Mehta. And, the Biden administration is reaching out to the oil industry and OPEC and Russia, not the United States. I mean, Monica, let's face it, isn't it time to call off this war?
Well, I think any investor that is looking for good value and good yield wants to call off this war because the oil and gas sector really got crushed over the last year. It lost more than 25% of its value. And a lot of that came from the sector having to slash dividends. But it's looking really attractive now, Charles. Oil stocks are cheap still relative to the rest of the market. There's strong earnings momentum. They're paying good dividends, and they've really benefited from this recovery in oil prices.
Well, they have, but part of the recovery, though, is sort of, hey, supply and demand, right? We know demand is going to grow, but we have all these issues with supply. And then on top of that, for domestic drillers, at least I can recall twice where President Biden's taken to the microphones and sort of threatened to crack down on the industry if they find any nefarious greed and cheating going on. I mean, that's kind of discouraging for the industry on top of the fact that, you can't drill in certain places and that space is only going to get smaller.
Yes, the oil sector has been the bright spot in the economy for the past 10 years, and now political ideology has made it a pariah. And to a certain extent, a lot of these large energy producers are the ones who are in the forefront of focusing on renewable energies. They're the ones focusing on EV charging points and carbon capture technology. And these are the folks that, as they diversify, are going to be the ones we need as partners in this energy revolution.
Even, of course, you just mentioned over the last 10 years, the vilification of the oil industry. So this started long before President Biden. In fact, the ESG movement really cost like billions of dollars that the industry needed not to get, right? The industry's gone begging. But now people are saying maybe ESG is coming around. Could they be coming to the rescue in some kind of way?
ESG has gotten terribly powerful. Of the $17 trillion of professionally managed money in the U.S., ESG touches about a third of that. And with ESG, I think there's a McKinsey study that shows that companies that have high ESG scores actually have 10% lower cost of capital for debt and equity. ESG is touching how CEOs get their compensation. ESG is impacting how board seats get allocated. I think in the last year we saw activist environmental investors take over board seats at Exxon. And the ESG movement is very much driven by women and millennials. Those are the subsectors that really are looking past just like pure profit and thinking about my investments need to match my ideology. But I think, with a lot of things, just the need for these companies to have to focus on the PR of how they're being actors, it's not necessarily playing out to effective policy to meet our 2050 objectives of reducing carbon emissions.
I got less than a minute to go. So ultimately, this big move that we're seeing, is it conceivable we can actually see $200 West Texas Intermediate?
That sounds really rich to me, but I mean, I think there's a lot of, there's a lot to think about in terms of us actually meeting and achieving these goals of becoming carbon neutral by 2050. I mean, we've got only 2% of our auto fleet is electric vehicles at this point, and we don't have the charging infrastructure. We don't have the power grid upgrades that we need. I think there's a lot of wishful thinking going on, but the energy sector is going to be important for the next 40 to 50 years. We're going to be pumping crude for sure.
Yeah. It's so funny. Outside of Tesla, you look at the EV stocks and these charging station stocks, people are getting shellacked on. I mean, the hype is one thing, but as you point out, we're so far away from the reality. Monica, it's been too long. Always appreciate it. We'll talk to you again real soon.